Now, my total yearly and total monthly dividend income has went up faster and slower over the last almost decade of my investing journey. Now, during the times where my dividend income did move up the fastest is during periods of where I received different dividend raises throughout my long-term portfolio, but along with that, during times where I reinvested all the dividends plus a little bit of outside money into higher yielding dividend paying stocks and ETFs. Now, to get right into it, in today's video, we're going to talk about several different higher yielding yet safe, in my opinion, ETFs that offer a ton of cash flow from day one. And these are the specific ETFs that I've been buying consistently now for the last few months at least, which have been helping me raise my total monthly and total yearly dividend income to a new level as fast as I've ever seen since I started investing around 8 or 9 years ago. Now, like I said, for the most part, these ETFs are relatively safe because they don't just track a single stock, but instead an entire index. But along with it, these ETFs offer a ton of cash flow from day one, pay income on a monthly basis, and are definitely ETFs you guys all should look into if you favor cash flow or dividend income. Now, all that to say that if you want to see which of these ETFs are the ones that I've been buying like crazy, well, then make sure to stick around, drop a link down below, and let's get right into the first one. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, the first ETF that I have been buying a little bit more as of recently, especially since the market has been dipping a little bit, I've finally been able to add a few more shares at a much lower cost, which has been amazing. I'm talking about JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, one of my favorite income-oriented ETFs. That's across the entire markets. Now, JEPQ offers exposure to the Nasdaq 100, but then with the use of disciplined option overlays, this fund implements written out the money Nasdaq 100 index call options that seek to generate distributable monthly income. Now, JEPQ has pulled back quite a bit ever since the rest of the market has pulled back quite a bit so far in 2025, but I personally see that as a long-term buying opportunity. I mean, for me personally, I've owned shares of JEPQ in my portfolio basically since the inception of this ETF, and since the start of owning this ETF, I've been paid consistent monthly income anywhere from the low 40 cents per share per month all the way up to 50 plus cents per share per month. Now, the 30-day SEC yield as of right now is around 11-12%, so this ETF is going to offer a ton of income potential. For every $100 that you're spending on this ETF, you're looking at, as of right now, around $12 per year in income. Now, as of right now, I think I own around $25,000 worth of this one, and I will add a lot more if we keep seeing dips in the Nasdaq, because once again, this is one of my favorite premium income-oriented ETFs. Now, another Nasdaq 100 high income ETF that I also have been buying like crazy, especially over the last year or so, is one of my other favorites, ticker symbol QQQI, the NEOS Nasdaq 100 high income ETF. Now, this ETF offers even higher of a yield than that of JEPQ at around 14%, so you are getting a bit more income potential compared to JEPQ, at least just based off of the previous 12 months. Now, the reason I've been buying so much of this ETF as of recent, for one, it's dipped down below my average cost per share, which has been amazing, so I can finally average down. It seems like for so long across my portfolio, and a lot of you guys can probably agree to this, we've unfortunately been sort of averaging up on our positions, and that's just because the market has been so frothy. So during the most recent pullback, I've definitely been taking some money and averaging down, which has been amazing. But the reason I like this ETF is because once again, it offers Nasdaq 100 exposure just like JEPQ, but then through the option strategy, it offers a ton of income generation from day one. Now, this ETF is also going to be tax efficient, at least for the most part, and since inception, this ETF has been paying around 60 cents more or less per share per month. Now, doing some very basic math, that means that for every $100 more or less that you buy into this ETF, you're looking at a monthly raise for your entire portfolio as far as income goes around $1.20. Now, that means that you only need to buy a handful or two of shares of this ETF, and you're starting to really raise your dividend income without all that much cash invested. Now, that's exactly how I've been adding so much income to my portfolio. Like I said, buying these higher yielders that track an index, because the ones that just track a single stock are a little bit too risky for me. Now, as much as I love Nasdaq 100 exposure because of the volatility and because of the juicy option premiums, I also have been adding more S&P 500 exposure to my portfolio, but again, through a high income strategy. I've been adding a lot of SPYI, the NEOS S&P 500 high income ETF, another one that's finally down below my average cost basis. This ETF is one of my favorites. It offers monthly distributions, 12.18% distribution rate. So again, you're talking a massive amount of income generation from a relatively small amount of money invested. Now, this ETF buys into the S&P, then uses call options to generate a ton of income in a rather tax efficient manner, but along with that has some potential for upside because of the underlying strategy. Now, distributions for this one are somewhere around 51 cents per share per month, so still you're looking at a massive amount of income even with just a few $100s invested. And across all my portfolios combined, I think I'm closing in on around 1,000 shares of this one as of right now, which is awesome. Another few higher yielders that I've been buying like crazy and that have really been helping me raise my dividend income every single month is GPIQ, or the Goldman Sachs Nasdaq 100 Core Premium Income ETF. This ETF once again offers Nasdaq 100 exposure, but through an option strategy. Now you might be asking yourself, why are you buying all these different ETFs, all these different income-oriented ETFs that all offer exposure to the same thing? Now you have to realize that even though GPIQ and say JEPQ both offer Nasdaq 100 exposure, they might write options differently or have a different overall strategy. So even though they give you exposure to the same underlying, they're not the exact same fund. Now that being said, if you want to just buy into one of these funds, let's say you like it better than others, and you want to get all your Nasdaq 100 or S&P 500 exposure from just one fund, well then of course go ahead and knock yourself out. But for me personally, I like to sort of divide up my overall portfolio and maybe even be overly diversified because that's just what I like. But this ETF's objective is to see current income while also maintaining prospects for capital appreciation. It offers monthly distributions, around 10% yield when it comes to this one, and it also offers some potential upside or potential downside. And that's because this ETF dynamically sells call options, meaning that the entire portfolio is not going to be hedged necessarily. But that also means that if the Nasdaq 100, the underlying, turns green and we head into a bull market, this ETF potentially has a ton of upside. Now the next one that I've been buying like crazy is a similar ETF to the last one, GPIX now. This one utilizes the S&P 500, but the same strategy more or less. Now in my long-term portfolio, I've been really trying to add more and more Nasdaq 100 and S&P 500 exposure because my rationale is that if I want some higher income strategies, I don't want to have them within a single stock. Take MSTY or TSLY for example, two ultra high yielding ETFs that could do very, very well if the underlying single stocks MSTR and or Tesla stock do very good. But because my risk tolerance is pretty low for me personally, I want to have exposure to the entire index, so S&P 500 and the Nasdaq are for me. Now this ETF yields around 8.2%, so you're getting a little bit lower yield with this one. But again, this ETF is going to do very, very well if the S&P does very, very well. And I mean, historically, it really has. Now, last but not least, as a very, very small position, I've also been adding a little bit more ZVOL, or the Volatility Premium Plus ETF. This one is extremely risky. It shorts the volatility index, which the volatility index has been spiking as of recently. So this ETF has been getting banged up pretty bad. This ETF yields around 33%. Again, a ton of income potential, but a ton of risk and downside potential because again, it shorts the volatility index. So there we have it. Those are several different ETFs that I've been adding like crazy to my portfolio over the last few months that has definitely been helping me raise my dividend income consistently. Now, if you guys have been watching me for a while, you know that in 2025, my goal is to get to $8,500 on average per month in dividends, which is going to take a massive, massive amount of buys throughout the next year, but also on top of that, hopefully some massive, massive dividend increases from names like SCHD and other different stocks and ETFs in the portfolio. Now, real quick before I go, I do have one last question for you guys down below. When it comes to raising your dividend income very quickly in your personal portfolio, what are some different stocks or ETFs that you've been adding as of recent? Let me know the ticker symbols in the comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.